Yo, what's good, guys? In today's video, I'm about to be going over trades you guys send me and basically reviewing them and telling you guys what you could have done better and hopefully so you guys could win more trades. I decided to post this on my channel so that all my subscribers could see and we could all get better as traders. But yeah, if you guys want to send me trades of your own and you want my advice or my help, you guys can send it on my IG. It's in the description. Just send me a picture and hopefully I could get to as many as possible. I don't have that many subs, so I should be able to get like most of them and review them on my channel and basically help you guys out. So yeah, without further ado, let's get into the first trade. So this one was the screenshot I got sent, and it was on April 17th. And I actually know why this trade was unsuccessful, and it was because of basically the bias into this trade. And I'm gonna just go over what he was like looking at. And I was kind of confused about some shit because look, 9:30, oh, he put a 9:24, I don't know why. But 9:30 basically we shoot down from 9:30 and we come up over here, we break structure. Sorry, we have a mark structure to the downside and then we break structure. This will act as your breaker block in his case. And he put SMT here. I'm not really a fan of SMT. SMT. I might have talked about it in other videos, but if you guys use it and it works for you, that's fine. But anyways, we break structure and we don't directly get into the breaker block, so he doesn't enter. Then we go into this breaker block as well as fair value gaps over here, and he doesn't enter for some reason. But then he decides when it fails, he decides to re-enter down, like not re-enter, but enter for the first time down here. This doesn't even really make sense to me because like I get if you enter here to some extent because you're looking for a move higher, but we literally failed to break this high over here. And we reject after failing to break it and you decide to enter. So this is just a less optimal entry than this. But that's not the reason why this trade failed, in my opinion. But yeah, it's just not optimal. If you're gonna enter, you should enter at the first point where it enters the PD rate that you were looking at. Because now after failing it, bro, it's just less likely. But yeah, so why this trade failed actually was basically an it's basically a bias issue, and it's I'm gonna go on my chart and go into replay. It's April 17th, so let me just shit. Let me go on the 30-minute real quick. Try to do no cuts in this bitch because yo, so it's hella authentic. But yeah, so April 17 is this date right here. And this what it basically was looking like. So if we zoom out, we're clearly in a downtrend, bro. It's literally clear, obvious that you're in a downtrend over here. And it's fine to scalp upwards sometimes, but even on the day, we literally we're going up here. We break structure towards the downside. We retest it up here, and now we're shooting down again. So we literally are forming bearish market structure within overarching bearish market structure. So it's like super like obviously you have to take shorts here. I don't know why you would take a long. That's basically my issue with this trade. You're breaking down way too much to take a long, and that's why I feel like a short here is actually optimal. I took a short this day and I won it, and it's because look, this is what we have over here. It's a market structure shift, and wait, sorry, market structure shift over here. Liquidity gets taken, but it's not an external liquidity that gets taken. See, the lows over here that are significant still haven't got taken. So we're starting to reject over here. So then we're like looking, okay, if we're obviously bearish, we're looking to see, okay, is the market is just retracing into hopefully, I think it was equilibrium, retracing above equilibrium, and then we're gonna roll back downwards. That's what we're looking for. We're not even thinking about longs until we break structure, right? So in this case, now when we go on the 1 minute, it's more clear what you're looking for. So let me mark out what I usually mark out. It's obviously I'm not gonna mark out everything because we have more trades to get into, but yeah, let's remove this bullshit. So 9:30 happens here, we collapse, okay, boom, boom, boom. We see that rejection on the 1 minute. It's into this equilibrium level. But even on the 1 minute, you could see we're in a downtrend over here. We still are like we're still in this range over here. So equilibrium is a point where, of course, now you're looking to see if we're gonna reverse. We're in a discount over here, and now we break structure towards the downside. Okay, that's why, especially since he entered late, I would assume that he would have seen that because we failed to break this high and we broke structure. So we're obviously in a downtrend now. So if you want to take this trade short, you would mark this out over here as a break of structure. And you could enter off either the break of structure, and it obviously falls perfectly within this fair value gap over here. So it's the model that I find the highest win percentage in. Break of structure, re-enter into a breaker block, and fair value gap over here, as well as you're in line with the higher time frame narrative, which is obviously bearish. So your stops would, if you could be more aggressive, you could be less aggressive, but in this case, it's pretty clear that the breaker block high is pretty close to the fair value gaps high as well. So this is a pretty safe stop over here, and you get a pretty good risk reward because you could obviously target only this 2.64, but it's actually not optimal, and I'm gonna explain why right now because let me go back on the 30. I look should have had these charts already, but I'm trying to be more raw with these videos, bro. Raw not in a homosexual way, but yeah, raw in like authentic way. So as you can see here, you're going for this low over here. We're not gonna retarget the same low we just hit. We're in a downtrend. You were supposed to be making like boom, this is supposed to be our ideal pattern when you're in a downtrend. So over here. We're not going to retarget this place. We have to target the next thing lower, which is external liquidity. We're not going to retarget the same low we just fucking made. So the next low that was untouched is pretty clear, and it's this low right before Asian session. So when you go on the 1 minute, that's going to look something like this. You could draw this out over here, but it's pretty accurate. It's about a 3.4. Was it about 3.48? That's a pretty huge trade, honestly. Yeah, it was about that 3.5 almost. So yeah, if you were more conservative with your stop, it could have still worked out. You could have had a 2.5 if you were all the way up here at this protected high. But yeah, that's the trade I would have looked for on April 17th. And yeah, it's basically a bias problem. And your execution was a bit questionable. So if just in general, you should not enter off the second time it goes into your PD rate, especially after failing to break the high. There's just way less probability. Like I would understand if, let's say, it broke here, broke structure, and then you were too scared to enter here. It broke structure again, you enter. Still a bit less optimal, but I understand it. But a fail of like you're failing to break structure and you re-enter, it's a bit questionable. But yeah, so that's for the first trade. I was low-key yapping a bit too long because this is supposed to be faster. I only have three trades to review, thankfully. So this is the next trade, and this was super questionable, bro. He went for, and I don't want to even try to be clowning right now, but bro, 9.52, bro. What you're like, you gotta be a fucking demon if you're hitting these consistently because, bro, that's an insane trade if you win. But obviously, you could afford to lose like seven of these trades and then win one, and you'll be profitable. But yeah, obviously there's a lot wrong with this trade, and this is April 4th. I'm gonna go into why this wasn't an optimal day as well, because I remember April 4th. Oh, damn, bro. I remember April 4th, my bad. Remember April 4th, it was a news day. It was a 8:30 news day, and it was a like super extended day. So, but anyways, you wouldn't take this trade because you didn't even inverse one fair value gap, and there's hella fair value gaps over here. No break of structure, nothing. You literally, I don't know why you would take this trade. Like even with your buy super strong, you literally didn't wait for anything. So, and you're not even at equilibrium. You're literally just over here. But you enter with it in this fair value gap right away. After nothing happens, your stop is super risk because you didn't even put it at the bottom of the second candle. You literally put it at the body of the second candle, which is like, bro, that's like extremely risky. So I don't know why you're going for this high of a risk to reward because that's outrageous. And let's say you even let's say you took this trade with a better stop, which is at this protected low over here at these three candles of fair value gap. I even wrote something here, so yeah, he knows. But you could have had your stop over here. You literally wouldn't have got stopped out, even though this is a bad trade. It would have went back up. It would have failed. Hopefully, by this point, you would have realized, okay, yo, this is a horrible trade. You even put a 5 minute fair value gap over here, and you didn't even it didn't even get inversed when you entered it. You literally, I don't know, I don't understand why you took this trade. Maybe this is your style of trading, like you're going for crazy risk to rewards, and sometimes you win and it works out for you, but this is a bit crazy. So yeah, we don't even go through this gap again. We failed to break structure over here. Hopefully at this point you would say, okay, yo, we gotta go break even. It would have got you out at break even. Same thing again. We reject off fair value gaps. We don't even break this structure as well. And now it goes down and it would have stopped you out if you didn't move to break even. There's not much to say about this trade because it's like pretty obvious why this wasn't successful. Like the first trade I reviewed, I could see why you would have taken it, but this one is a bit questionable. And another reason why I wouldn't have taken a trade on this day specifically is because April 4th, it's obviously I think it was eight. It might have not been 8:30 news, but yeah, it was super extended over here. And I don't take trades when we already hit the third standard deviation of Asian range. That just shows we're super overextended. So even though you're obviously going to be bearish if you're all the way down here because of the insane move, it's a very low likelihood that you keep going down past that third standard deviation. It's just probability wise. So, and I learned that from Jade Cap, by the way, and I did my back testing on it. It's pretty true. Once you're at three standard deviations, it's like rare that you're going to keep going further. It happens sometimes, of course, but it's best to stay out of this trade. And of course, by the way, the only way you would be going is downwards because before 9:30, we literally reject off this fair value gap over here. So I don't know why you would take a long. I guess you're trying to dig more into the fair value gap, but we literally rejected off the fair value gap. So that's again bias wise, it's incorrect in my opinion. And second, you have to look at this picture. We're super overextended on this day already, so you wouldn't want to take a trade April 4th. But yeah, that's why that trade failed. And oh, by the way, in general, if I keep doing this series, there's some trades that I'm gonna be like, that was a good loss. Some trades you're gonna lose. I obviously lose trades all the time, and that's fine. But these two trades, I think they were definitely preventable. Next trade, last trade for this video. And this trade, I didn't even go over. I just like found this trade, but I'm not sure exactly the date because it's not really illustrated anywhere. So I have to kind of go off this picture. And what I see from this picture is you're entering straight up off an IFVG. I don't really have the high time frame bias, but we are on a 5 minute, so you could see a good amount over here. I'm assuming this is an AM trade, and it's pretty obvious because I think this is the 8:30. It's 8:30 news day. So one thing about this trade is you inversed the 8:30 news, which is happens a lot, and I would understand a trade that you're trying to go to take out that the data low over here because we were extended to the upside, right? This news is obviously a bullish news event. So you like I get you're trying to go for the data high or trying to go for here, but we were already like we're already extended towards the upside. So you're trying to now we're trying to go back down, right, to balance out the market. So I understand if you're trying to get a trade on this leg. Now we go back up, we reject off this fair value gap, and it shows us basically we're trying to be bearish now because boom, 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 boom. But you view it as, okay, we failed to break this low over here, and now we're going back up. That could be fine. However, that's why I'm not a fan of IFVG, and it still works. By the way, IFVG works, and you could take trades off of that. But I'm saying the win rate is obviously going to be less because you're not even breaking structure over here. I understand, like, if you would have broken structure and inverse the fair value gap, you enter without a retrace, that's fine. You'll get a worse risk reward, but I understand you'll get into more trades, and perhaps that's how you like to trade. You hate missing out on trades, and that's fine. But you inverse the fair value gap, but we still literally didn't break any structure over here. We literally just inversed one fair value gap and we're in low-key a bit of a downtrend, especially since news was bullish and we already were retracing it, and we rejected off this fair value gap as well. So overall, you're pretty bearish unless you break structure over here, where then you could see, okay, now we're trying to go back up and maybe take out this high, but I would low-key target an external high because that means you're bullish on the day, and we already reached this point on the day, so you're trying to go even higher. But yeah, so no break of structures here is the main issue. And I try to give as much context as I can because I don't see the date, so I can't really go on it, and I don't see so obviously I can't go in the higher time frames. But yeah, that's the problem. So break of structure was non-existent. That's the main problem with this trade. But yeah, three trades. I try to review them kind of quickly, but you know me, bro. I low-key go on rants, bro. I'm trying to fucking talk as much, give as much information as possible, but next time I might try to be more like speedy, maybe get through more trades, but that all depends on how much you guys send me. So again, my IG's in the description. You guys can send me trades on there and ask for my advice, and hopefully I could post as many as possible on my YouTube channel. But yeah, if you guys enjoyed this type of video, it's a pretty new video. Please leave a like and a comment if you want to see something else, different types of breakdowns, maybe more in depth, maybe less in depth, bro. Like you might say, bro, shut the hell up and go on to more trades, or bro, stop fucking yapping about the same things over and over again. That's fine, bro. Y'all can tell me that, but if you like the video, tell me that as well. Anyways, bro, see you guys in the next video. Easy.